Hello everyone and welcome to today's morning report on Wednesday the 18th of January with me, Richard Perry, market analyst at Hantec Markets. We've got a slightly positive open on the European markets, but the main factor is Forex trading. We've got some big moves on these Forex markets. Basically, they have been politically driven, really. We had comments yesterday from Donald Trump and he suggested that the strength of the dollar was a problem, and subsequently the dollar got sold off sharply. You can see this move, big strong move to the downside on the trade-weighted dollar. That was actually took the dollar below the level it was just prior to the FOMC rate hike in December. That's interesting. So this dollar weakness is a feature. Now we've had a slight rebound on the dollar today, but nothing really to sort of change the trend yet. Let's look at the 10-year yields. It's sort of basically consolidating, really. Yes, they were marginally lower yesterday, but today is sort of slightly higher. And I think if these treasury yields continue to go lower, that this dollar correction has still got legs to run in it. But certainly this move that we've seen in the dollar is very interesting. Now, what we've also had is slight uptick in the VIX volatility, so that's interesting as well, taking equities slightly sort of off their highs, and also you're looking at commodity prices, which, to be honest, on the oil price is sort of consolidating really, but the gold and silver prices are sort of beginning to gain traction, and that is a focus for me in my chart of the day, certainly silver-wise. Anyway, today, now in terms of what we've got to look forward to today, well, we've got a speech this evening by Janet Yellen at 8 o'clock, I believe it is, and she's going to be focusing on sort of monetary policy, I think, today. So that will be something that the markets will be looking out for. But before that, we've got a whole raft of economic data to look out for. Starting at 9:30 with the UK unemployment data, ILO unemployment staying at 4.8%. Nothing really doing there, but the real move will be average weekly earnings. Now, we had yesterday inflation for the UK came out well above expected. But the average weekly earnings are expected to stay at 2.6% for the ex-bonus basis. Now, that will be interesting because that will mean that real wages are actually going down marginally. So that could be that is slightly disappointing, certainly. But certainly at the moment, the inflation going up in the UK has an impact on potentially the decision-making process by the Bank of England. So something to watch there. You've got the final reading of inflation for the Eurozone expected to increase, well, expected to stay at where the flash reading was at 1.1%, but that's an increase from 0.6% last month. Then you've got United States inflation, 2.1 increase from 1.7, so that increase in the oil price is continuing to filter through to CPI, but the headline, that's the headline. The core basis is just a mild increase to 2.2%. But remember this: the Fed looks at PCE rather than CPI on inflation. You've got industrial production increased by 0.6% on the month, 75.4 on the capacity utilisation. That will be interesting, but certainly until the capacity utilisation gets above 75.7, you're probably not really seeing a massive improvement there, but certainly 75.4 would be an improvement on last month, but as I said, 75.4 just takes us back to where we were a couple of months ago. And then finally, well, that industrial production at 2:15, and then finally, Bank of Canada at 3 o'clock, not expected to move on rates, stay at 0.5%. So lots going on today to drive these markets. My chart today is silver, so let's have a look at silver. Now, silver has been rallying as gold has been. Gold through 1200. Now, $1,200 was a key level on gold. Silver is sort of testing its key level equivalent of 1720, but not yet through it. 1720 is a pivot on silver, and it's not quite yet through it. Hitting that reaction high. So get rid of that. So it's been a bit slow. Getting that reaction high of 1720 yesterday, but falling back again today. But the momentum indicators are positive. You've got the RSI now above the sort of 60 level into the mid 60s. You've got MACD lines turning more positive, stochastics remaining positive. So there is an interesting move that we've got there on silver, and I think it's going to be a situation where little corrections are bought into, and I think that silver remains a strong recovery play. It is actually outperforming gold despite the fact that it hasn't broken through its resistance. But a breakthrough 1720 would open sort of the next sort of resistance levels within this chart, and I think that there is continued gains to be seen if we can see this through 1720. You're sort of looking out for the next resistance levels coming in through these old lows from October. At around that 18 figure level is the next or a next pivot line, and then you're looking out towards 19 figure. So there is an interesting improvement underway in silver, and I think it could continue, certainly if it breaks out through 1720, because the momentum indicators would suggest that as well. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.